What's up, everybody? It is Monday, June 20th, 10:30 p.m. Time for the market analysis video. I actually recorded this before, but I hit the wrong button, so no audio. So sorry about that for those of you that watched a video for a few seconds without any sound. I apologize. Today was an interesting day. So I talked my last video over the weekend about how I thought because Brexit expectations have lessened, so the idea that stay has gained momentum and that Britain will, I think 75% chance now, remain in the European Union, that I thought that the SPY would open higher and gold would open lower on Monday, which is true. Now what's interesting is it's sold off a little bit throughout the day. We had a really large candle on medium volume, a little lower than recently, but it has been higher volume lately because of all the volatility and the chop. So it was a pretty interesting candle, a lot of width to it, a lot of breadth. And so I think that breadth actually might have set the range a little bit for the SPY leading up to this Brexit vote. I think in order for it to achieve above, let's say, 210 or 206.50, either direction really, you would have to see a significant and unexpected change in polling or some other kind of headline. I think leading up to this, we'll see if the trend continues now. The Remain gain a little bit stronger until the vote. And with that being said, I think a little bit of volatility will leave the market. And then it'll be interesting to see where the SPY moves from there, because I think the lasting focus in this market when it comes to fundamental data has been federal and ECB and obviously Britain as well, rate expectations, which have gotten more dovish recently, even in the midst of all this Brexit talk. I think Fed rate hike expectations have lessened. The idea that we'll be in a low interest rate environment and that we aren't ramping up anytime soon, I think is upon us, and so that could push the markets for some times. But that being said, with this week coming up, I'm not going to be posting any trade setups until after the referendum. I think that's prudent, and so even if my strategies were to signal some trades, I'm not going to post those. I think waiting until the referendum or making a bet based off of the referendum is the way to go. If you're making trades based off of some technical analysis or seasonality, I think that's just wait a week. If you want to base it off of a discretionary trade based off of the way you think Brexit's going to go, I think obviously you can do that. That makes some sense because that is the overriding factor. Speaking of this with gold, so with gold we saw it open lower, but then it rose throughout the day and closed well off the lows. I think this may have been a test and maybe the near-term bottom in the gold market here. I'm not sold that Brexit remain in the European Union. I think that's status quo. I think that's neutral to slightly bearish for gold, but I don't see it being majorly bearish for gold or a catalyst for another downswing from gold, especially with this overriding idea that Fed rate hikes are going to be less. I think along with Brexit fears flows money into the US dollar. I think money will flow out of the US dollar as a safe haven, and it might not flow out of gold in the same rate. So I see gold being neutral to slightly bearish on a Remain in the European Union, but I think the longer term trend of these rate hike expectations and so forth is a bullish environment for gold. And so while it may remain in this 123, 124 area for a little bit. I think ultimately it's constructive and moves higher. So looking at the dollar, we saw it open much lower. I think a remain vote, which again is, I think the odds so far have moved to 75% stay, 25% leave. So the odds, I think, are squarely in the camp of stay in the European Union, which is generally how the trend goes. It reverts back to the status quo before referendums. That's the general trend. I think with the remain vote intact, the dollar will fall lower. It may even test this recent low of just below 124 on the UUP. And so with that, I think that'll help bolster gold and oil. So oil prices, again, closed below the 50-day, but then right back, closed above the 200-day moving average, and then again today, gapped up and stayed high, stayed above the 200 moving average into that little support / resistance little area congestion zone here. So with that being said, and I think oil goes higher probably from here, which is good for the U.S. economy in general. A lot of the emerging growth over the last few years from the markets has come from oil exploration, this shale oil revolution. And so as prices go back to the $60 and $70 a barrel range, if it can get there, a lot of these shale oil companies that have been hanging on will start to be profitable. And so oil rigs can start opening up again. And that would be a big catalyst, I think, for a more bullish economy, and a hope to get us back on the economy back on this kind of growth trajectory that it's been a little bit flat lately. It's interesting how oil, which is, I think, we can consider an old school industry, has kind of become a strength for the U.S. economy, at least in the near term. Or it could be, at least in the near term. So with all of that being said, look at the Nasdaq, the IWM. It appears to be that we could be setting up for higher prices, if we assume a leave vote isn't going to happen. And so throughout the week, I think we could trend higher from here, from this close on Monday. But I still don't think we break the 210 area before the referendum results. And as soon as the referendum results go, we may get, again, like I said in my other video, if we get a sell-off into the relief rally that should come with a remain vote, which is, again, looks like that's the likely scenario, that the vote will be to remain in the European Union. If we get a sell-off from that rally, if they sell into that rally, that makes me a little bit more suspicious, a little bit more bearish. If otherwise, I think it could propel us to higher prices with this new, continuing more accommodative Fed than what was initially decreed or promised or whatever. The expectations for rate hikes has dramatically softened over the last few weeks. So with all that being said, thanks for watching. Subscribe to my YouTube channel, Trade Kraken, at StockTwits and Twitter. God bless, good luck, and great trading.